Well, for the first time this week, the Nigeria Exchange Limited closed in positive territory on Thursday after it traded higher by 0.03% on renewed bargain hunting. The All-Share Index rose by 14.06 points to 44,332.21 points from 44,318.15 points as the market capitalization grew by 8 billion naira to 24.14 trillion naira from 24.13 trillion naira. The market was lifted by the buying pressure in the consumer goods and industrial goods sector, which appreciated by 0.2% and 0.09% respectively. The insurance sector also gained 0.2% during the session. However, the banking counter depreciated by 0.82% and the energy index fell by 0.39%. During the trading day, investors transacted 119.2 million shares valued at 3.2 billion naira in 2,909 deals, and in contrast to the 165.4 million shares worth 3.7 billion naira exchanged in 3,183 deals in the midweek session, indicating a decline in the trading volume, value, and number of deals by 27.9%, 12.87%, and 8.61% respectively. Now, for further analysis, we have Ambrose Modion, Chief Research Officer at Invest Data Consultant Limited, joining us virtually. Thank you for joining us, Ambrose.
Thanks for having me.
Thank you. Well, for the first time in 4 sessions, we see the markets turning green. What are your thoughts on this? All right, looks like we've lost connection with Ambrose, but we're looking at how the markets performed yesterday, especially as we see it increasing or gaining 0.03% to close in the green territory. And one would want to investigate the reasons for this gain, especially as the market has seen 4 consecutive losses in the past trading days. But of course, we will take a break now. We'll come back with more analysis. Please stay with us. All right, Ambrose Modion is back with us, and we're looking at the market's performance yesterday, especially as we see the market gaining 0.03% after 4 losses, after the 4 trading session losses. Ambrose, you were reacting to this gain.
Yeah, as I was saying, I said that the market having a slowdown in losing momentum is a good sign for the market, but it does not say that market cannot go below what it is today. Well, because we are in any season, I think it's time investors take advantage of high probability trade with moving data. Why did I say so? Numbers are coming to the market now. We have seen these numbers, their previous performance. Here, I will expect a company to push the data number. Or yes, because there's liquidity in the market to push this reaction more. So the data performance for stronger numbers for this company will give investors an insight where they should be putting their attention in terms of investment. Not knowing that in anywhere in the market, where you are in the physical market, either you are in the bond market will not change or give you something tangible in the stationary environment as we are today. Yes, the yield might be coming up as far as inflation is almost getting to 1%. There's no return to the physical market that is also attractive. But for those that are going to take risk, I'll be looking at the of the physical market. But I believe that the equity market has all it takes for investors to kind of protect their capital and at the same time generate profit or make more additional income in this process. Let's try to watch the volatility in the market we are seeing. We saw that Ether was responsible for the decline we saw in recent days. Even the market from all the way from around 47 to almost 44, breaking different line down to this level. I believe that at this point now we are seeing more values on the table for investors to pick. That's how I tell you cherry picking. A lot of stuff are good now for people to just start buying. What you are doing. This is not time to follow a bad wagon decision because your friend is buying. You know why you are buying that stuff and your source of fund and how long you want to wait. You want to have it at the back of your mind. You need to fund decision at this point because you are already at the peak of the energy. Yesterday we saw numbers that came from Accra Prudential and Taco, PLC. These numbers are also an indication that most of the companies on their stage are still talking about better numbers to tell you that at the end of the day, we're going to see dividend being companies either improving their payout. And we now.
Okay, so now we see that this was spurred by the consumer goods and industrial goods in the sector. And you also talked about the large loss by Airtel Africa. But what are your thoughts about this loss, especially relating to the consumer goods and industrial goods, which drove the loss largely?
Now, if you look at the index at market yesterday, it was a sell off in banking sector and the oil that I see. But I believe that for seeing improved performance in industrial and consumer goods, look at that data. Industrial goods are about 0.09 positive. Why no consumer goods are about 0.22 positive? It tells you that yes, people are still looking at them. But I say that when there's inflation, most times this company will be able to pass all their increase in cost towards to their consumer, because one, the price of this goods will continue to increase. It will reduce what they are seeing. But yes, prices have increased, but things matter because most of Nigerians that will buy these goods don't have much in their hand. Their disposable income or their purchasing power is already weak. That's why for those consumer goods, there are some goods that will still make it because of the nature and because of the essential of this product. But I believe for investors now, look at those cyclical sectors and also those sectors that use that their prices of their goods are already up, and we're seeing improved numbers on them. I'm pretty sure because at the end of the day, we're going to pay you a better dividend. I believe that banking sector is just a pure mistake. That's why we saw that banking sector lost about 0.8% on their index, and that of oil is also profit taking some oil ticker.
Okay, well, you just answered the question on my mind, but let's look at what to expect today, especially as we close the market for the week.
Well, I actually expect that we should expect a mixed trend today. Why I say so is that more numbers are supposed to come today, and also the one that comes to our market also reacting. I told you that why market will remain in the downtrend because of high cap stocks like FA and others that are lost. But if we start seeing better number and people that reacting, that is on their portfolio, of sector, and also trying to buy into value, I see the market also in a new direction today. But like I said earlier, there's no cost for now in the market because I see more value on the table for investors and for traders that also change their strategy, because at this time now, momentum in the market is changing, also seeing volatility on a high on increase. That means that you should want to trade what you see, not what you hear. Trade what you see, right? You need to understand how to combine your technical and your fundamental at any given market situation.
All right. Thank you so much for the robust analysis. As always, Ambrose Amodio, Chief Research Officer, Invest Data Consultant Limited. All right. Have a fine weekend. Still to come after the break, the Nigerian Communications Commission has directed telecommunications operators in the country to reverse the 10% increase in tariff for voice and data services, which they recently started implementing. This is our focus next on the show, as we take a look at access to internet and the cost of data, as well as other services.